You cannot fix it. It's mathematically done. The debt cannot be repaid. The only option is to default, either not pay or destroy the value of the dollar and make it possible to pay the interest and to pay the principal back. You'd have to have a dollar that dropped, 80% or more for that math to work out where the debt would be payable.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for August 18th through August 25th, 2025, while supplies last. First this week, the 1-ounce gold Australian kangaroo or gold nugget coin are just $60 over spot per ounce. Next, pre-33 US gold $10 Liberty coins are $50 over melt for AU grade and $70 over melt for BU grade. Gold 20 franc coins are just $30 over melt per coin. Next, silver Australian kangaroos are only $2.79 over spot per ounce, and with a 250-ounce monster box, they're the lowest price monster box available. Finally, silver 10-ounce Nordic mint bars are just $1.89 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We have a returning guest who almost needs no introduction. Bill Holter, a former Wall Street trading manager and an analyst of markets today, as well as a bullion dealer, joins us this Tuesday, August 19th, 2025. Bill, thanks for coming back on Liberty and Finance.
Thank you, Don, again.
We had hoped we were going to have a video link today. We're having technical difficulties establishing that video link, so we've got you by audio. We're grateful for that. And we have a whole bunch of questions that have been submitted ahead of your arrival here. And the first one is rather intriguing. It's about the floundering U.S. Treasury auctions recently. The question from Johnny Truck Driver says, greetings from Wyoming. Your opinion on what happens if there are no buyers for the upcoming Treasury bond sales? A very real scenario for sure.
Well, obviously, the Federal Reserve would be the buyer of last resort. Now, what's happening is you've got foreigners that are clearly backing away from Treasury purchases. You've got some big holders, China, obviously one of them, that have been liquidating their Treasury holdings. And with a lot of those funds, they've obviously been buying gold to replace Treasuries on their balance sheet. But if we got to an auction where there were no foreign buyers whatsoever, it pretty much would be game over, because that's the world sticking their middle finger up and saying, we don't want your debt. We don't trust you.
So how do you see the outcome of that? If the Fed has to step up and be the last buyer of last resort for the Treasury, where do you see this having real consequences in the Treasury market itself, in other markets, in the precious metals? Give us your scenario of how that goes.
Well, first understand that U.S. Treasuries are the foundation for the world's financial system. So that's first and foremost. If we had an auction where there were no foreign buyers, that would create massive selling, because who wants to be the last one out the door? And if treasuries are being sold and there's no buyers, then the bond prices drop and interest rates go higher. So can you imagine that happening at the same time the Fed's cutting interest rates? The Fed cuts rates, but yet there's no buyers for the debt. I mean, you'd have market rates going higher with the Federal Reserve losing control of yields, losing control of the Treasury market.
And how do you see that affecting precious metals and the stock equity markets?
You would see all markets collapse. You'd see a derivatives daisy chain of collapse, and all roads do lead to gold and silver ultimately, and that would be the road right there, where if you don't have gold, if you don't have silver, you don't have wealth, because you would see you'd see a complete seizing up of credit markets all around the world, and everything runs on credit, whether it be the financial system or the real economy. I mean, goods will not make it to market without credit. So, I mean, that scenario is the scariest scenario of all. If foreigners just completely backed away, then that would lead to other foreigners saying, hey, wait a minute, there's no buyers, I want to get rid of mine. And you'd have trillions of dollars of treasuries being dumped, and who would be the buyer? The only entity could be the Federal Reserve, and they would be overwhelmed overnight.
As far as what official actions the government has been taking to try to shore up the financial strength of the U.S. balance sheet, there's a question here from Terry Hines. He says, our government should have been buying gold and silver over the past 25 years when it was cheaper. Do you think they were smart enough to do that? And or are they currently trying to buy more silver and gold?
No, I don't think that they've been trying to do that. I think they've purposely been trying to suppress the prices. I mean, the prices get suppressed with derivatives, but who's doing the suppressing? It's done with paper. It's done with paper contracts. I mean, yeah, obviously the best thing to have done was not go off the gold standard, get our fiscal house in order, and bite the bullet back then. It was only a small bullet. Now it's a cannonball the size of the moon. It's not doable now. You cannot fix it. It's mathematically done. The debt cannot be repaid. So the only option is to default, when I say default, the only option is to either not pay or destroy the value of the dollar and make it possible to pay the interest and to pay the principal back. And you'd have to have a dollar that dropped, 80% or more for that math to work out where the debt would be payable.
A few minutes ago, you mentioned about the U.S. Treasury bonds being the underlying foundation below most of the world's financial edifice that's been built up on top of that. What about the departure for the past 3+ years with the BRICS plus nations, and now we have African nations that are trying to come up with a commodity-based way of interacting with each other outside of the dollar? Where do you see that reaching a point? At what time do you see that reaching a point, or at what milestone of evidenced development to where they could actually achieve some stability and continuity outside of the life of the U.S. Treasury and dollar?
They may be there already. It's hard to say because we don't know how much gold has actually been unloaded by these BRICS countries. And we don't know what the number is going to be that they're going to revalue gold to, but they will have to revalue gold because something's going to have to take the place of U.S. Treasuries once they evaporate.
In your view, are we at that point already where the U.S. Treasury bond market failure would not necessarily result in a global collapse event for all other countries because they've already got another life raft they've built up in parallel?
You're going to still see, even if a perfect BRICS world, you'd still see massive problems all over the world because the dollar is so prevalent, and the dollar is just an offshoot of treasuries. That's what treasuries are denominated in. So as far as foreigners are concerned, if they've unloaded gold, they're going to do relatively much better, but there's still going to be all kinds of pain. Now, the Western world, you're going to see a complete wipeout with countries that have no gold, and you're still going to see big damage on countries that do have gold because no one has as much gold as they have treasuries. Treasuries are the lion's share of the balance sheet for both foreign central banks and for foreign sovereign treasuries. Foreign sovereign, treasury. I'm not saying U.S. treasuries, but foreign treasuries themselves hold U.S. treasuries. And when the U.S. treasuries melt down or evaporate, that's going to leave giant black holes of nothing on their balance sheets.
in the light of that, it sounds like a lot of the central banks of the world have been scrambling for the past 5 years or so to buy more gold combined than they had in the previous 60 years combined. We have a question here from Gord Bonaire, who says, Bill, you once said that the Chinese were intent on buying all the gold, and once they thought there was no more to be had, they would offer it at 100,000 per ounce, instantly repricing gold. Do you think this is the price? This price is. Do you still believe this, or do you think the USA will beat them to the punch next July 4th or 26th?
Well, I'm not sure I know what it's 250 years next July 4th, but I'm not sure what they're getting at.
I think that that's a date that's been floated by, for one, former Trump financial advisor from the first administration, Dr. Judy Shelton, who said that Trump should announce a 50-year long bond redeemable at maturity in gold on that date.
Okay, well, that's assuming that we do have the gold. There's not been an audit since 1956. I personally assume that we do not have the gold, because if we did, why wouldn't we show an audit every year, or an audit every 5 years or 10 years or whatever? There's not been an audit in 70 years. The U.S. can't just go out and just gobble up gold, because there's not that type of size available. And to answer his question, yes, I still believe that, and a failure to deliver by COMEX or by LBMA will certainly be a marker that the Chinese will look at and say, hey, wait a minute, there's no more gold to be had. Let's pull the plug. And whatever number they decide on, I think the West is probably going to revalue first, and it's not going to work. The first reset is not going to work, and you may see the East or / Mother Nature mark gold and mark assets to fair logical, water seeks its own level to values that make sense.
We have a question here, again, looking at the sort of the end game as people are getting really pinched in the middle class, even those who've been perhaps using precious metals as a physical savings account over the time. 3 different viewers here, but I'm going to merge their 3 questions. Mr. Symbolic 7 says, if you talk to precious metals dealers, the older silver holders are bringing in bags of pre-65 silver to sell as their bills are stacking up now. We also have a comment here from Chuck Miles 56, who says, what if you sold all your silver to pay bills? Is it just too late to start stacking over? Seems like a joke, and time is running short. And I'll get to the third one after that. But just this plight of people who've been longtime stackers and now are being pinched with current rising taxes and other bills that they have, whether it's medical or other bills.
Well, first off, it's never too late to stack, because when you're stacking, you're getting capital out of dollars or yen or euros or whatever currency, and you're putting it into real money that can't default. So 1 ounce is better than no ounces. What was the first part of the question?
The first part of the question is just a recognition that precious metals dealers are reporting to this individual that people tend to be coming in to sell their pre-65 silver as their bills are stacking up at home.
Well, the question is, why is that happening? My thought process is there's not enough money. There's not money on the streets. People are being pinched, and I know you've seen the same thing. I've seen more sales in the last 9 months than I had in the previous 15 years combined. So we're seeing mass selling. Occasionally you got somebody who's selling to buy a property or a home or whatever, or somebody's selling to buy a business or whatever. But I think, and I generally ask, why are you selling it? And I've only had one person tell me in this year, oh, well, I'm taking my profit. And, of course I asked, you're taking your profit, where are you going to put the money? What's the alternative? And they said, oh, I'm just going to put it into a CD. And I just, what can you say to that? I mean, that's just wrong think. But what's happening, people are liquidating metal to live.
And you say that's just an acknowledgement of the reality of the hard times, and in that case, people are tapping their stack of metals as an external savings account that they view as a tangible savings account outside the banking system. And your view is, yes, do that if you have to, but only to the extent that you have to. Try to maintain that asset outside the banking system as long as you can.
Yeah, and I would say because nobody knows, when the plug is going to be pulled. I mean, my advice would be don't liquidate so that you have a year's worth of bills. You might want to liquidate so that you have only 2 months worth of bills, and then 2 months from now, liquidate again. Because the longer this goes, the higher the price of silver and the more the likelihood that we have the reset where all of a sudden, wow, you've got a lot of capital, and that's going to happen at the same time that you see paper assets, bonds and stocks drop in value. So your relative position, the more metal you hold, or if you can hold it long enough, you'll have capital. I'm not going to say you're going to be the winner, because that's not the type of world. I've always said, be careful what you wish for. $100,000 gold sounds good to somebody with gold, but what kind of world will we be living in?
Related question here from Chuck Zerbel, who says, and I know this is a personal and individual question. We can't give individualized financial advice, but at least if you could address the principles involved. Chuck Zerbel says, I have 10,000 silver eagles and I want to retire on this. I'm over 70 years old. Am I going to be able to retire soon?
I would say after you get a reset, 10,000 ounces of silver should do it. In today's pricing, no, obviously, $400,000 is not, you're going to burn through that. Even if you just did 20,000 a year, which that's obviously not enough to live on, but 20,000 a year, it's going to be gone in 20 years. Now, just from a historical perspective, Dunnigan, you could go back a couple hundred years ago, and all the time before 200 years ago, if you had 1,000 ounces of gold or 10,000 ounces of silver, you were considered a very wealthy person. And that was all you needed for the rest of your life. Now, because of the suppression, the paper derivative suppression of both gold and silver pricing, that no longer holds.
Are there guidelines that you look to in the current pricing environment for people to consider that how should they adjust their thinking, given that the world we now live in, for that same calculation they're trying to make as far as what's a retirable amount?
That would require me to put that to a calculator. Obviously, if you've got 1,000 ounces of gold, you've got $3.5 million. That's probably enough to retire on. I mean, 1,000 ounces, if you got 1,000 ounces of gold, that's enough to retire on. But if you got 10,000 ounces of silver, which, 100 years ago, 500 years ago, 1,000 years ago, 10,000 ounces of silver, it was a ratio of 16-1. So if we had a ratio today of 16-1, where would that bring silver? It'd give you a number of what, like...
It depends where gold is at that time. But yeah, in terms of ounces...
Well, no, but I'm saying if gold doesn't change, if gold didn't change and you had a ratio of 16-1...
Yeah, there'd be a $200, $220 silver or something like that, yeah.
Yeah, then you'd have, a couple $1 million, and yeah, you could retire on that. But that's not the reality. But that reality will occur. You will get a much, much lower silver gold ratio once one of the two fails to deliver off of either COMEX or LBMA. I mean, we'll at least come down to 25 or 30-1 ratio from the current 90. So your silver is going to outperform gold 3-1 if, when that happens. But under current pricing, 10,000 ounces of silver, you can't retire on that.
Looking towards kind of where this all leads to for our society and for people who are trying to live their lives. Here's a pessimistic and an optimistic sides of that coin, and to get you to weigh in on it. Chrysanthemum 8392 asks, do you believe that the time will come when tyranny becomes so great that people will be forced to abandon their homes and live as they can? And on the other side of the coin, Martin says, do you agree that we can thrive and not just survive?
You could thrive relatively. When I say relatively versus, the vast majority of the population. And when I say thrive, I'm talking about, have enough food, be in a safe place, be able to weather the storm without going hungry, without being attacked. Yeah, that is possible, but that's not going to be widespread. There's going to be widespread, in my opinion, there's going to be widespread death. And when I say death, I'm talking about death from lack of food, death from very possibly not having clean water, death from not having free-flowing electricity. Just understand that and I've said this for years, the whole thing is about credit. The entire system runs on credit. And once credit stops, the system, both financial and real, will basically stop. And you're going to have what you have, and that's all you're going to have. And when I say that's all you're going to have, what happens if the power company is not pumping electricity? What if the water company is not purifying your water for you? How many people, if you and I were talking 100 years ago, say, right at the Great Depression, people were able to live because we were still an agrarian society. Lots and lots of, more than 50% of the people grew a good part of their own food. And if they didn't, they knew how to hunt, they knew how to fish, and they knew how to grow food. Nobody knows how to do that now. The only thing they know how to do is, get in their car and go to 7-Eleven or the grocery store or whatever. And they think that, hamburger buns and whatever grow on grocery store shelves. They don't. In order to get food to market, you have to have credit.
Correct. And that's why it's so important for people to establish either start growing some of their own or also establish relationship with local growers who are doing it without long supply chains and a lot of external dependencies. We talk with Joel Salatin from Polyface Farms in Virginia. He says, unlike his neighbors, he creates 4 times the county average per acre of food, and they buy 0 fertilizer, 0 pesticide, 0 herbicide, because they do good carbon hoarding and regenerative agriculture, that sort of thing. So you got a very good idea to get in tight with somebody who's doing a sustainable method of local food production.
Done again, the time to do that is now.
Exactly.
The time to make your connections with farmers that will accept metal as payment, that time is now.
Well stated. And you've also talked to us about the hazards of staying in the system, given the great taking and the idea that your what you believe to be ownership of the stock of companies is actually no longer really in your name. You're just a beneficial party, et cetera. We have a question from Peter Tompkins who says, are your stock statements safer in a bank or with a transfer agent, or are both open to bail in?
The absolute safest is to have the certificate in hand, because it's similar to a title or a deed. If you've got it in hand, you own it. If you have it with a broker, it's in their name. It's not in your name. They own it for your benefit. If you have it at the transfer agent, it's better than having it at a broker. But what if the transfer agent has a problem? It's in their name for your benefit.
And the idea of keeping such documents in a bank safe deposit box?
No, absolutely not.
How about precious metals in a bank safe deposit box?
It's a bank not safe deposit box.
A bank not safe.
Right. That's what you should call.
And the reason that is that because of the Dodd-Frank Act of 2010?
Well, even during the Great Depression, people went into banks, after the bank closed and the safe deposit boxes had been emptied out.
Everything that we've talked with you about gives us a lot of food for pause and reflection on what we're going to do to make sure that we're doing the right things to protect ourselves. And you speak and write about this fairly frequently, not only on our channel. If people want to make sure that they're staying connected with you and following your work, where should they get plugged in?
You can go to my website, billholter.com. I'm probably, I have a Substack account that I have no idea how it was opened, but I don't even know, like 500 or 1,000 followers, so I may start posting on Substack. And if you want to contact me directly, you can go to my business email. It's bholter@proton.me.
Bill Holter, thank you for joining us once again here on Liberty and Finance.
My pleasure. Thank you, Dunnigan.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for August 18th through August 25th, 2025, while supplies last. First this week, the 1-ounce gold Australian kangaroo or gold nugget coin are just $60 over spot per ounce. Next, pre-33 US gold $10 Liberty coins are $50 over melt for AU grade and $70 over melt for BU grade. Gold 20 franc coins are just $30 over melt per coin. Next, silver Australian kangaroos are only $2.79 over spot per ounce, and with a 250-ounce monster box, they're the lowest priced monster box available. Finally, silver 10-ounce Nordic mint bars are just $1.89 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.